Okay, good afternoon. This is about the energy transition. The energy transition is happening, and that's a good thing. But oil demand is still growing. On the financial front, sustainable investing or ESG investing has emerged as mainstream, but investors still want fat dividends. All companies have to deal with that. They have to deal with an often contradictory mix of short and long-term considerations, with a mix of financial and non-financial issues. So what should they do? Focus on what they do best, produce oil and gas, or diversify into renewables and power or green technologies? Do they eventually need to shrink? To help us answer these questions, we have, as Jim said, 3 oil companies actually, and 1 representative of the financial community. And I will start right away by asking a question to our first oil company, which is Total, with Arnaud Breuillac. Companies like Total and Shell are often given as examples of virtuous and proactive companies as far as climate change and decarbonizations are concerned. So what's your strategy at Total on climate and decarbonization?
Thank you, Philippe, for the question. I'm very honored to be attending this event and address this distinguished audience. The world needs energy. And when you take into account demographic growth and economic growth, the world will need more and more energy. And what our customers are requiring is energy that is affordable, reliable, and clean, and for most of them in that order. Policymakers have made some commitments, various commitments over time, but last one is one made in Paris in the COP21 in 2015. And I believe our industry has also a contribution to make. And Total has the ambition to be the responsible energy major. And we have stated that we want to grow sizable and profitable low-carbon energy business. And just last month, in fact, in New York, we presented our strategy and outlook to the financial community, and we indicated that we want to grow, in fact, this business by investing altogether, when you combine what we are doing in our new GRP branch, it's gas, renewable, and power, about $2 to $3 billion per year in integrated gas, mostly LNG, and $1.5 to $2 billion in low-carbon electricity. And we see that those two energy are fast-growing, in fact, in the energy mix. And this is how we intend to respond to the demand of this growing market and to contribute, of course, to the decarbonization of the energy mix.
Okay. So as you said, one key part of that decarbonization is renewable energy. So Luca Cosentino from Eni, what are your plans in that particular segment of decarbonization?
Thank you, Philippe, for the invitation. And in Eni, I mean, we have been doing, first of all, as an initial statement, we have been doing renewables for like almost 40 years. In fact, most of the oil and gas companies, if people don't know this is what happened. I mean, and but in 2015, we actually took the decision of transforming this, which was basically an R&D or minor activity, into a business line. So since 2015, we have made up a new division, which is with profit and loss responsibility, which is actually tasked with the objective of realizing projects worldwide. So at present, after 4 years, I think it's almost time for us to draw some conclusions on this. And we are currently working on 60 projects, both brownfield and greenfield, in about 12 different countries, 4 different continents. And so this is actually a business which is new, which is growing, and which is gaining now materiality within the overall business of Eni. The objectives that we have stated and we have communicated to the market are quite ambitious, because we are going to realize 5 gigawatts of renewable energies, and I'm talking about non-programmable renewable energies, which means solar and wind and hybrid with storage. by 2015. And this will entail investment of the order of magnitude of about 1 billion euros for each year from now on. And this, of course, excludes biofuels, excludes any other types of green chemistry or other business which still have a base of renewables. So new division, big ambitions, we will be growing in the future, and we believe that this will be a fairly material part of our business within a few years from now.
Okay. Tomás, García, Blanco, you at Repsol, you have the same kind of ambitions and targets as your colleagues. And how strong is the impact of ESG considerations and ESG investors on those strategy?
In fact, ESG these days, for example, in Repsol, let's say that 30% of our institutional investors are ESG. So we have to face the reality, and that reality requires transparency. Okay, so we need to be part of the solution. We want to be part of the solution. We want to be part of the Protocol of Paris. We want to be committed to reduce the emissions, not only in our traditional business, that is the upstream and downstream, but also we understood that we need to listen to the society and open a third way, that is the renewables. And that is going to help us just to also reduce our intensity of CO2 emissions per unit of energy that we supply, we produce. And again, with ESG, we need to be very proactive. We need to transmit basically something that I guess all of us, we feel very proud that we are part of an industry in which we provide quality of life to the people. Okay, that's quite important, despite that people should yell on us and claim that we should be the same. I will say that we are very proud of being part of the industry that has been providing quality of life for the society in the last 100 years. And obviously, we need to convince our investors that we will continue working on providing that quality of life. You mentioned, Arnaud, that we want to provide affordable, okay, clean, and obviously sustainable energy to the society. And to me, the key point is being transparent in the way we communicate.
Jim Wicklund, you're an investment banker based in the US. Is the ESG pressure as strong in the US as it is in Europe? The common view is that it's not as strong, but it's catching up. So is it catching up, or is the US fundamentally different from Europe in terms of ESG?
It's absolutely not as strong. Mm-hmm. The US is made up of smaller, more parochial companies with not quite the world view of these three gentlemen, and that's put us behind. A study done by Credit Suisse, my former firm, polled 250 CEOs, and 87% said that they didn't think ESG was terribly important, that less than 5% of their shareholders paid any attention to ESG, when in reality the same study we did showed that 25% of investors at that point in time cared about ESG. And so it is catching on, because the US companies suffer from a higher cost of capital than these gentlemen, and it's showing that not being ESG compliant shuts you off from a great deal of the pool of capital out there and effectively raises the cost of capital. And so they're coming around not for the altruistic reasons that some people may, but because of the realities of economics. EOG, a well-known US independent, has already spent $23 million in pursuing their ESG initiatives as an example of how, while we may have been late, we're coming to the party quickly.
Okay, let's go back into the strategies. Arnaud, gas is a big part of your decarbonization strategy, and many oil companies actually emphasize that gas is a bridge fuel or even a destination fuel to a lower carbon economy. That's probably true, but is it enough?
Certainly not. It's not enough, but it's very important. And it's probably, in the midterm, the most pragmatic and practical way to reduce, to curb the emissions, and that's essentially substituting coal for power generation by gas. This being said, there are other advantages to gas, one of which is clearly that it does provide a good swing producer, or it's a swing producing capabilities with renewables. So it goes quite well with the development of renewable, as renewable are by definition intermittent. So this is clearly very important as well. And gas is also a valuable commodity to be used as feedstock. And one of the strategic axes of Total is to develop, we say, the value chain on gas, as we have been doing quite successfully on oil for many decades. Now, when it comes to other important axes, we clearly have the energy efficiency in the way we use fuel, the way we use hydrocarbons, in fact, in petrochemicals, all the transformation of these molecules. We need also to look at CCUS. CCUS is part of the solution, and Total is investing in a few projects, particularly in Europe, one in Norway with Equinor and Shell, another one in the UK, where we are trying to get over the industrialization of these solutions. Today, CCUS is still expensive, and so we need to make sure that we can find projects, but it's clear that this is going to be part of the solution as well. And last, of course, we need to invest in what we call nature-based solutions, which is sort of carbon sink. And we can see from our studies that you can, in fact, invest quite efficiently. And some figures, are giving about $10 per ton of CO2, which makes it quite competitive when you look at, for example, the maintenance of the primary forest or humid zones. And Total has committed to invest $100 million per year. And of course, the importance is that this is cumulative over time, and that depends on the quality of the project. So as you can see, it's a combination of actions that can be taken. Gas being, of course, what comes first and will have the most significant impact in the next few years to come.
And going back to renewables, Luca, many oil companies say we like renewables, we would like to invest more into renewable energy, but we have a problem. It's not profitable enough. It doesn't get to the same returns we can get in our traditional oil business. So how can this problem be solved?
I think this question is not a fair question in a way, because it's like I say comparing apple with pears. Okay, and let me expand on this. I mean, from one side, the two risk profiles are completely different. Okay. Of course, we know. I mean, I do remember the face of my CFO in 2014 when we had the fall of the oil price. And of course, when you talk about renewables, the risk profile is completely different. You have a long-term cash flow, completely different business model. This on one side. But on the other side, I think that oil companies, when they think about renewables, they tend to think from, let's say, a perspective of the upstreamers. Like somebody who takes some sort of commodity, which in this case is an electron instead of a molecule, and sell to somebody. Now, if you think this way, you're wrong. And of course, renewables are much, much less profitable than any other business in the oil and gas sector. But if you think about this electron and couple with something else that you have in your company, then it's a completely different matter, because then the value is actually something that you build on along a value chain that you can build in your company. And just as an example, I mean, in E&I, we are the incumbent in the retail of gas and electricity in the country. So we have like 10 million customers. So if I think about my renewables energy, not something to sell to somebody out in the external world, but something that I can sell internally to my internal client, and he can make another margin on his side, then it's a completely different thing. So I guess that we have to think about renewables within oil and gas company as a different kind of business that must be leveraged on synergies with the traditional core business of an oil and gas company, and this is where it makes sense. Otherwise, it's an unfair comparison, let me say.
Yeah, that makes sense. let's stick to the electron, Tomás. Several oil companies say, including Repsol, that they want to develop into beyond renewables, into electricity in general, with Shell noticeably saying they want to become the biggest electricity company by 2030, and other oil companies are also investing into that sector. So what's the right strategy there in the power sector? What should oil companies do in power?
Let's say that for us, getting into power could be easier than for power getting into oil and gas. And maybe I'm a little bit arrogant in my assumption, but the point is, getting customers in our gas station is not so difficult. I mean, the contact with the customer is happening every day. We have more than 1 million customers every day in our gas station, full station in Spain, and you can approach to the people easily. So that's a benefit we have on favor of getting into the gas and power business, for example, in Spain. When we talk about the barriers just to get into the upstream business, for example, I mean, next week we are going to spudding a deep water well, a shallow water well in Guyana together, Arnaud and myself, our company. So it will be much more difficult for a gas and power company to get into this business with the capital. And so by the end of the day, for us, oil and gas companies, we are selecting to get another kind of energy that could complement our portfolio, becoming more and more suppliers of energy and not only suppliers of molecules.
Okay. Before getting back to you, Jim, I have another question, an oil and gas question for an oil company. Because Total is also planning to develop in power and renewables. Is there a right size for that? I mean, I believe you have a target of getting to 10 or 20% of your business by 2035 or something like that. And other oil companies in Europe, at least, have similar targets. Some critics, of course, say it is not enough. Some, maybe on the investor side, might say it might be too much because it's not what you know how to do best. It's not very profitable. So is there a right size for these green diversifications for an oil company?
As I mentioned before, what we said is that we want to grow sizable and profitable. We believe that to be profitable, we need to have size. Size do matter, but we need also to be selective in the investment we made. And I sort of refer to the $1.5 to $2 billion per year, and we presented that in our outlook until 2025. And that's because we see growth, and we see growth with profitability at stake. And we described actually the way to complement what Luca was saying, the way we can make, say, for example, solar renewable project profitable. If you take a typical solar project, 1 gigawatt at $1 billion investment, rate of return 6 to 7%, and then you de-risk the project by our project management capabilities, and then after you have got all the permitting and all of the planning for the development, you can divest actually 50% of your project. Mm-hmm. And furthermore, you can leverage financing by, say, a ratio of 70 to 30%. It means that then you need, in terms of investment, to dedicate $150 million out of this $1 billion investment. And then your return on capital is more than 15%. So that's the way we see that we can grow a profitable business in this type of activities, which indeed is fast growing. Mm-hmm. And we see that it's becoming competitive, and of course not in every market, and you have some risk taken into account, country risk and so on, but we can see that we can, again, grow this profitable budget. And what we have indicated is that this statement was made in 2015, the COP21 Paris Agreement. By 2035, which was 20 years from that, we would have about 20% of activities from this from these low carbon activities.
Okay. So Jim, what do US investors and US oil companies think of those green diversifications?
Well, most of us remember back in the late 80s when the Exxons and Chevrons and majors of the world went into renewables because they felt they had to, and they all lost money. And so going into it this time, as Luca and Arnaud says, they're all insisting that whatever they do has to be profitable. It's not a charitable event for them to be playing in this area. But
they're not charities.
No, definitely not. But in the 80s, by the oil industry, it was. Mm-hmm. It was doing it to save face. Today, it's real because of the cost of capital, but also the valuations. And these gentlemen talked about it a little bit. But right now, the valuations of the oil companies and oil service companies are at record lows. And if you can do something that is not quite as profitable, though it may have an equal return considering the cost of capital, if it improves your valuation, to spend $1 billion and get a $5 billion lift on your equity valuation is definitely a good investment. And that's before we even consider the profitability of the operation. And so the US companies are embracing it, though not nearly at the level that the European companies are. But it's definitely being pursued, and we're seeing it in the oil field service companies as well, where companies are getting into wind installations in Europe and going much more global and much more renewable in their service offerings as well.
Okay. Beyond finance and profitability, Luca, beyond the financial sector, how serious, and beyond the ESG pressures from the investment community, how serious are pressures from the civil society like the ones we've seen this morning? And it looks like whatever oil companies do, they're bad. So what can they do to regain trust among civil society?
Yeah, this is absolutely a serious question. And this morning, actually, I went outside. As I told you before, I wanted to talk to these guys and just to get the feeling, you know, what they feel about us, because they were looking at me like a strange animal, you know, the tie and inside all these people, all in money. In fact, but this is a perception that they have outside this world, and we must consider this, because the world is changing. We can sense this. It is changing. The majority of people don't know us. The majority of people has forgotten that the wealth that we have today has come from the oil and gas business. But this is the way it is today, and we have to cope with this and consider this. In my opinion, the biggest hurdle that we have in front of us is convincing people that we are not greenwashing, you know, and because we did it in the past, as it was mentioned, and we certainly at the beginning thought about it. There is a component, still today, there is a component to this, because there is an imbalance between what we communicate and what the amount of money that we actually invest, all of us, into this. But I think that this is going to change. And the challenge for us will be to try to be as transparent as possible, as sincere as possible towards what we're doing. Because our world is changing. The perception of the boards, of the top manager, it is changing. There's lots of discussion within each of our companies. Things are actually evolving, and we have to be good enough at explaining this to the people, convincing these people that we're actually discussing this, and we will be part of the solution rather than part of a problem today. So in my opinion, the recipe is actually try to be as transparent as possible in what we are doing and regain that credibility that today, obviously, we have lost.
Mm-hmm. Yeah. Transparency, that's a very important topic, Tomás. There's an ongoing debate about the ESG metrics and targets, about scope 1 and 2 versus scope 3 in terms of what kind of targets oil companies should have, whether those scope 3 targets should be about intensity, the way Repsol or Total have posted some targets, or should they become absolute? Should all companies commit to reduce their absolute emissions by 2030 or 2050 or whatever? So what's your position in terms of those targets and metrics that all companies should transparently have and publish?
First, I will say that we need to talk about that, not only about oil and gas companies, because we're getting the monopoly of this discussion, and in fact, we are responsible of part of the emission of the world. What about the agriculture? What about the rest of the activity of the society? And I guess we need to put, let's say, index that will help just to understand this problem globally. If not, we are focusing locally, and we are focusing in one industry that to me is not adequate. So, considering that, we in Repsol, we believe that we need to go to a scope 3, because by the end of the day, is the emissions associated to the complete change of value of the elements in our business that is contributing to the emissions. The same way that our, let's say, diesel is contributing to the emissions. Also, the materials that we are using, and all the plastic materials that are used in a hospital just to guarantee the quality of life are contributing as well to the emissions. Also, we need to understand the impact of electric vehicles in the emissions and the complete change. So we believe in the scope 3. And again, to me, the main point is not talking only about the index for the oil and gas company, because I guess the media is focusing a lot in the oil and gas. And I guess this is a fact associated as well to the rest of the activity of the human being.
Yeah.
If you allow me just to interject here, I think that whatever the industry will do, and as you said, some of us have started to make some commitments. We have, for ourselves, also given some ambition, as we said, so it's not quite a commitment, but trying to explain the journey that we're going to follow. But I think at the industry, as you mentioned, Luca, we have a credibility or a trust issue at stake. So we need to make sure that whatever commitments we make, we will fulfill. I think that we cannot afford on this very important subject and very sensitive subjects to disappoint. So, and that is, we see some escalation, in the commitments that are being made by some, and we need to be mindful of the fact that the credibility of the industry is at stake.
Jim, what's the view of the investment community about that? Should there be some sort of norms and standards in terms of ESG reportings and targets, the way there are norms and standards in financial accounting?
The answer is yes. If you don't know the rules of the game, it's awful hard to play by the rules. There are a number of organizations in the oil and gas industry looking to set up their own accreditation series, since nothing exists. If you look at the UN 17 points of sustainability, being in the industry we're in, we already fail several of those from the start. And so we need to have rules that and set standards that we can adhere to. Otherwise, we're shooting in the dark. So definitely.
Mm-hmm. Okay, Arnaud, to you again. At the end of the day, if we start talking about absolute emissions target, and if we take into account the climate scenarios that are around, at the end of the day, it looks like that the oil and gas production should decrease. Are we heading towards a no growth or even a negative growth situation for the oil and gas industry?
As you may know, Total for the first year, this year, has put together an energy outlook we presented in February. And we essentially developed two scenarios, one that we call momentum and another one that we call rupture. Rupture being the one that potentially would be giving something that would look like the 2°C scenario of the IEA. In both scenarios, what we see is that the oil consumption worldwide, and this was a projection until 2040, would plateau or decline. Gas would grow, and very significantly, of course, in the rupture scenario. Renewable will grow even faster. What you have to take into account is that in any case, and not just in our scenario, but when you look at the various scenarios that have been developed over time, you see that oil and gas will still provide or should provide about half of the energy, the primary energy mix by 2040. And something that is not always, very much known is that with oil and gas, you have natural decline. And so even if you take oil production, and we are today at around 100 million barrels per day of liquid production worldwide, even if you take a scenario where this would remain flat And we see that, by the way, it's growing as we speak. But and then you project yourself with a 3% decline, which is a very, very conservative decline. It's more, 5 to 6%. It means you have by 2035, 2040 to develop, to explore, develop, and produce 50 million barrels per day, half of what we produce today, say 5 times Saudi Arabia. So this is something that means for industry, there is still a lot of investment and development to make, even in a scenario where the demand would stay relatively flat. So any prediction is bound to be wrong, but what we have to realize is that our industry still has a lot of contribution to make to this energy supply. Oil and gas will continue to provide the vast majority of at least half of the supply to the world. And our responsibility as an industry is to make sure that we do produce this oil and gas responsibly. And this means, of course, cutting on our own emission, that's scope 1 and 2, because this is something that we control. And clearly, again, we have to make commitments and to fulfill those commitments.
Luca, I asked you before about the civil society. At the other end of the spectrum, we've been talking about, among us, European oil companies, a little bit about US oil companies, but at the other end of the spectrum, you have a number of national oil companies across the world which are less than enthusiastic about decarbonization and climate issues. I don't ask you to name and shame, but that's also an issue, I guess, for IOCs. I mean, it's a reputation issue for the industries. So what's your view on that?
Yes, I think this is a very important point, very interesting, because no matter what we do as IOCs, we just have 10% of the global production, maybe 5% of reserves, something like this. So the overall burden of this is actually non-NOC, and we have been approaching some of them, because in countries where we have been working for 50 or 70 years, like Repsol or Total or other companies, of course, we have this relationship, right, with the NOC. We have known them for ages, basically. And so we have been trying to talk to them about the possibility of doing this transition in those countries together. Because now we have done some work. And so what we see is actually there is an interest. There is a willingness to learn. There is a willingness to understand the problem. Of course, there are objectives or pledges that those countries have been doing in Paris or in other arenas. And of course, those NOCs are charged with the task of meeting those objectives somehow. And so there is an interest, and there is a playground, to work together. The bottom line of all this, I think, is that in the end, the NOCs, they have to provide the basic primary energy of those countries. And this actually creates an underbalance of the situation. So looking ahead, I'm not so sure. Certainly, they will be doing something. Certainly, they will be, producing oil, a lot of oil in the future, even beyond the day that we will stop from our side. And I think that in the end, they will also carry most of the burden of the CO2 emissions or GHG emissions for the future, unfortunately.
Tomás, I will have a last long-term question. To achieve deep decarbonization, one option is no growth. Another option, as Arnaud mentioned before, is a CCS or CCUS or reforestations and those technologies. How important is that for you?
I guess we need to keep in mind that emissions or increase of emissions will keep on happening, considering that most of those emissions are coming from countries that are going to grow. China and India and Southeast Asia are the main responsible of the increment of CO2 emissions in the following years. And obviously, we shouldn't be cynic enough just to tell them, don't do what we did just to arrive to the quality of life we have. So we need to understand that this is something that is going to happen. And obviously, if we still believe in Lavoisier and the material balance, so if the content of CO2 in the atmosphere is what it is, and will increase as time goes by, if we don't put remedies just to capture it, obviously nothing is going to work. So to me, the technology that will be able to develop in the following years just to be able to capture that CO2 of the atmosphere is going to provide us the sustainability that we need, because energy is something that, as Arnaud mentioned, we will need in the following years, because we are more than previous years and will be more in the following years in the Earth.
Jim, you wanted to add something?
I just wanted to make the comment that it was 5 years ago that Exxon, Chevron, and several other major oil companies shifted their primary strategic focus from growing production to growing financial returns, which was a significant shift in the business. And then in 2017, the gods that keep stock indices moved all the energy stocks out of growth indexes and into value indexes, where investors are now asking for return of capital and return on capital rather than just top-line growth. So whether the industry grows in the future, right now investors care about growing the financial returns more than growing production.
Okay, we have time for one question, perhaps two, so I need one very good question. Very good question. In the back, looks like there's a very good question. Or
Pressure's on.
Always. Michelle Foss, Rice University, two-part. So this subject of risk and perception of risk and risk profiles of different investments has come up already today a couple of times. And I would just like some comment back again on the view of risk about renewables, since most of that de-risking comes from government backing in a variety of forms, everything from supporting direct investment in renewable energy capacity to forcing utilities or other entities to take on contracts that help to provide the backing for the projects that the energy bankers like, because energy bankers like cash flow waterfall, right? The second part on valuations and perception of the values of companies, if you don't invest in oil and gas, I would think that you're going to be creating a very good chance later on that the value of the commodities will increase, and therefore the valuations of the companies will increase, further creating some of the dilemma for whether or not and how to invest in other things. So I would appreciate some thoughts.
go ahead.
Well, I mean, first of all, I think in terms of risk management, control risk and the like, I think energy companies, I should say oil and gas companies, are quite used to that. And we are managing a cocktail of risk over time quite successfully, starting with a geological risk, with exploration, going on to the risk of development, very large projects in usually quite remote areas, then taking, of course, the risk of the operation over time, the risk of all of the environmental risk. We take the risk of the oil price, which is not a small risk. So I think that we are probably better equipped to take risks in the field of new energies and renewable energies than others. I think we have really real project management capabilities. So I think we are quite well suited to take this sort of risk. I would like also to speak about a very important point in terms of sustainability, because I think for our investors, what they want to see, as was mentioned by Jim, is returns on their investment, on their shares. And the sustainability of our model comes partly from the fact that our core business is going to remain for decades to come oil and gas, that we know to do very well, and by the way, the market needs, our customer needs, and also that we're able to start our transition, and of course, investing in what is a profitable new energy sector. And integrating the value chain is a very important factor into that, as was mentioned by Luca.
And we just took 5.7 million barrels of oil off the market. WTI didn't stay above 60 for a day. The back end of the futures curve went down. It was a day on the financial markets of short covering and nothing else. So I'm not sure that the doomsday scenario, we quit drilling for oil and it goes to $1,000 a barrel, is really something that anybody here is worried about, at least in their careers.
Okay. Would you want to add something about that? No? So I think we are running out of time. Thank you very much, gentlemen.
Thank you very much.
Thank you.